Hold on. Okay, great. So normally with, with trading, everything, all the grammar or anything what would they talk, right? We are trading off of support and resistance, right? So market does whatever it needs to do, 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 go up, or it might come down, retest, and do whatever it needs to do. What we're basically doing is we're trading off of resistance, we're selling, and we're buying off of support if all our conditions have been met. That's basically what we're doing. But we need to understand, identify where we want to buy, where we want to sell. In high frequency, we are taking the trades, it's time-based. So we're taking trades for very short period. That's why it's called high frequency. Be it 5 minutes, be it 10 minutes, be it 15 minutes, as long as price respects what you want to do. If you're taking a sell and you take an entry price at, if I put my horizontal ray here, if I take an entry, say at 134, we use only the last 3 digits. If I take an entry at 134, all I'm saying is that at the end of 5 minutes, at the end of 3 minutes, at the end of 10 minutes or 15 minutes, depending the time frame I'm taking the trade, price should stay below 134. As long as price stays below 134, I'll make money. Same thing, if I'm taking a buy here, maybe at 122, after 3 minutes, after 5 minutes, based on my analysis, if price stays above, then I make money. It's as simple as that. So this is how we make cash trap. I bring cash trap back up. Okay, well, let me just refresh this. Okay, good. So like I said the other day, right? The currency strength meter. Okay, so if we look at USD JPY now, USD is 33, JPY is 21, which means that what? We should be looking for what? A call. If currency 1 is stronger than currency 2, we're looking for call. If currency 1 is weaker than currency 2, we're looking for a put. Call means buy, put means sell. Okay, so
Yeah.
once the currency strength meter is correlating with the arrow that you are seeing, if the currency strength meter is correlating with the arrow, then we will now need to go further to step 3. And step 3 is price. If we're looking for a buy, is price at a support. Okay, and being it as a support. So if I expand this, you see this green line, these red lines here. These are mini resistance, right? That you can take trades off of. You see the green line, these are mini supports that you can take a call from. Okay, you sell here, you buy here. So that's simply what it means. However, based on technical analysis, okay, as a trader that you have been, you will see here, mainly looking at this chart, you see this area that I'm highlighting. This is a support zone. Why is it a support zone? It is a support zone because price formed a pivot here, came back to retest it here, went up, came back to retest, okay, went up, almost came back, it didn't touch this area, but went back, consolidated a little bit, came back here. Why did price make a U-turn here? It is because it is confirming that this area is a previous support, these 2 areas. That's why price did what? Reacted off of this place and it went up. So with the cash trap, if you want to take, since USD JPY, USD is stronger than Japanese yen, at this point in time, when the market came down to this area, we would have seen an upper arrow. You'd have this red arrow that you are seeing here, this red arrow that you are seeing here, you would have seen. So let me take this off, move Alt 1, 2. So let me put back this buy zone here. So at this point in time here, I'm pretty much sure that cash trap would have called an upper arrow here. Boom. You see an arrow like this saying you're ready to buy. So let's say all these areas, this place that I'm circling had not happened. This whole place here that I'm circling had not happened. When the market came to this area here, USD is stronger than JPY. That is 1 point. Second point is we're getting an arrow, 2 points, right? Whenever you have the currency strength meter correlating with the arrow, that's 2 points. 1 point for the currency strength, 1 point for the arrow. The third thing you want to look at is price at a support. And this support we're talking about here could be these green lines here, or is it touching the Bollinger Band? If it's touching the green line, that's another 1 point. If it's touching the Bollinger Band, that's another 1 point. So that's 4 points already. And like I said earlier to some of my partners that I was training, for me, if I get 4 points, I'm good to go on the trade. Because sometimes your RSI, your stochastic and your RSI may not have given you the cross down, cross up. What I mean by the cross down, cross up, so what I mean by the cross down, cross up is trade coming down. So let me change this color here so you can see it. Let me use yellow. Okay, good. So when we say cross down, cross up, what we mean is the market coming down, crossing beyond this support, this green line here. This
I know that.
Yeah, cross down, up. That's another point for you. On the SOCAS, on the RSI, we're looking for that cross down, cross up. Okay, so if you get the stochastic and the RSI cross down, cross up, it gives you 5 and 6 points trade. So which means that 1 point for the currency strength meter, 1 point for the arrow, that's 2 points. Another point for the support, 3 points. Another point for the lower Bollinger Band, that's 4 points. Cross down, cross up, 5. Cross down, cross up, 6 points. But sometimes the stochastic and the RSI may not give you the cross down, cross up, or the cross up, cross down in terms of sell and the cross up, cross down. If they don't give you at that point in time, no problem. If you see 4 points minimum, you're good to take the trade. Okay, you get me? So all you just have to do is come to your broker, right? You come to your broker. So let's say, for example, this area here now, we're looking to take the trade. We are probably putting our horizontal ray at, it could probably be somewhere around here. Let me do this here. Good. So this is 686, right? 686 will be our entry. So what we'll do, we'll come to our trading, our broker, we'll log in. We'll go to Euro JPY. We'll set our timing, 3 minutes. Come to Euro JPY, hit Euro JPY, and do what? And wait for the trade. And what you want to do is you don't want to risk more than 3% on your account, which is the amount here. So if you take 3% of your account, let's say maybe you have $500 on your account, 3% is $15. So what you want to do sometimes is, for starters, your first entry, you want to put 1% of your account so that if the trade goes down some more, you can take a second entry, another 1%. So that's like 2% of your account. So that within 3 minutes, all things being equal, this trade is expected to clear. And if it doesn't clear, you can do rollover, and you know that at any point in time, you are not risking more than 3% of your account. If you stick to that, I'm telling you that you're going to grow your account and you'll be able to manage your lessons. Now, with what we are seeing here, this trade did not need any rollover. This is a 5-minute chart. 1, 2, 3, 15 minutes afterwards, this candle stayed up. As a matter of fact, 3, 4, 5, 6, 7, 8, 9, 10. From here, from this 686 that the market came down to, it never came back to this area again. So this was an easy trade, an easy clear for you. The same thing is what you look for on the sell. It's just the same confirmations, just on the opposite side of the trade. So having said that, let me look for a trade where we are not looking for. So right now, right now, based on what we're seeing here, so if I come to Forex Factory, let's just see if there's any news. So there's Euro news in another 10 minutes. I don't see any big news per se like that. So based on what I'm seeing here, this market, I would wait. So to take this trade, this is another region to take the trade. This 686 is a good zone for a buy. So you can always come to your regular, trading view and do what? Set your alarm there. So that once cash trap gives you that call signal, you want to take the trade. So this is the area that I saw on cash trap. So what I normally do, I'm just going to come here and set an alarm. Boom, I'll set an alarm way before my entry so that when the market comes down there, I'll have some time to take the trade. So you see, I've put my horizontal ray there. So what I'm expecting this market to do, because USD is stronger, is that I'm waiting for this trade to do like this, come back down, come down to this zone, react off of here because of this support in the past. Because of this support in the past, react off of here and go back up. So this is how you mark up your chart and you just wait for the trade. So it's all about wait. Don't just jump into anything. We just wait, right? We wait because the market does what? You can see what it did here on cash trap. Went up, came down, went up, played around, came back to that zone, went up, pulled back a little bit, it's gone up. So we're waiting for the market to come down to this zone. Then we take it for a buy. It's as simple as that. So once you get 4 confirmations at below, you are good to go. Now, let's look for a sell example. And you also want to look at something. Once you see the currency strength meter, that they are not far apart for any currency pair, you want to stay away. You want to go for currency pairs that are far apart to trade. For example, I'm going to be trading anything now. I'll be looking at USD JPY. USD JPY is good. Euro JPY is good as well. Okay. So, and you want to stick to few currency pairs. Okay. That's why Matthew trades only 3 pairs. There's a reason why you have USD JPY, Euro USD, and Euro JPY.
Euro JPY.
Yes, as the first 3 currency pairs on this place, because these are the only 3 pairs that he trades, and he said he's made over 80% of his money from USD JPY. So you want to stick to a few currency pairs. Then as time goes on, you can expand your choice of currency pairs that you're trading, because you don't want to be all over the place. You want to have your markup set. You wait for the trades to come within 1 hour, even if it is 1 trade you take or 2 trades that you take. Sometimes within 20 minutes, you are done trading. You've taken you've made like 5% of your account. You're good. You're done trading for the day. Close your laptop, go and do other things that you want to do. Okay, so this is when you are trading on your own using the cash trap. But more often than not, you need to, follow these guys. Look at the schedule, even if it is not Matiteya or whoever it is. What you want to do is go on their sessions, anyone that suits your schedule. Just kind of see what they do, see how they call out their trades, see whatever they do and all that, because you have access to all these things. These are things that you paid for. You paid for all these educators to be able to learn from here, learn from there, learn from there, put everything together, come up with your own way of looking at the market, your own style of trading, and you are good to go. But in order for you not to waste so much time trying to reinvent the wheel, we already have what is working, which is the cash trap, the double blessing strategy. So the double part of it is that we usually, when these setups are being done, usually market changes directions at the hourly, the 15 minutes, the 30 minutes, the 45 minutes. So if you see any of these setups, your
hourly,
setup
30 minutes.
hourly, 15 minutes, 30 minutes, 45 minutes. So what I mean by that is, for example, if I come here now and I put my cursor here, okay, so let me expand this thing so you can see what I'm saying. So you can see let me move all this way. Where my cursor is, you can see that at the bottom, you are seeing 1915.
Yeah.
This was a bearish candle. It was going down. And it did was it changed direction to the upside. At what? The quarterly time frame, the 15 minutes time frame. If I come back here, sometimes you don't get it exactly, but towards the 30 minutes. So if I put my cursor here, you can see this is 2030. At the 30 minutes time frame, what did the market do? It pushed up again, it changed direction. If I come here, oh, this is beautiful. Look at it, 15, 22, 15. At the 15 minutes time frame, the market did what? It pushed up again, right?
So, excuse me. So what you're saying in essence is that even if the market is setting up, for instance, it's setting up at 6:56, just the way it ticks now,
yeah,
then we'll have to wait till 7 o'clock before we
God
take
bless
the trade.
you. So yes, so right now, let's say for
If,
example now,
even if it's pushing to your direction,
if it's pushing to your direction, so right now on USDJPY, we're looking for a buy based on what we see on Cash Trap, right? USD is stronger than the Japanese yen. We're looking for a buy. So at this point in time, this trade is not settled because what we want this trade to do is to come back down here. This is our buy zone area before we take a buy.
must it be this particular area? What
So,
of if, for instance, this
go ahead.
dynamic support appears before then? Can you consider that?
Good. Yes.
Are you
So
hearing
that,
me?
yeah, I can hear you. That's a
Hello?
good, yeah, I can hear you. Can you hear me?
Yeah.
Yeah.
Yeah,
So
I said, must we wait to get to
good.
that level?
So we
Because
must
that
not,
level already done,
yeah,
Yeah.
yes, we must not wait for it to get to this level because from what I'm seeing here, this is forming another support here.
Yeah.
Right? This is forming another support here based on what I'm seeing here. One touch, two touch, this market will come back and react off of this place and go back up because, you know, previous supports, the market might not come back to that area, especially if the market is trending up. Okay, if it's an uptrend, it forms higher high, right? Higher highs and higher lows. Yeah, thank you. And that's what I see happening here. So had it been this market the way it is right now, let me go back. Okay, no, this is not what I want. So this market, the way it is right now, had it been as we are speaking right now, this market pulled back and is coming back down to this area, we will take this trade right now together because why? It's coming back to a support area. USD is stronger than the Japanese yen. If we get an up arrow here, boom, 2 points for us. Our third point will be our support area. The fourth point is going to be this our lower Bollinger Band because also forming as a support for us, right? The candle support is there, which is this green. My my highlighting is covering the green support that I'm seeing here, right? So this place is a support already. I see support here. I see support here, right? So
I'm not seeing your cursor, please.
You're not seeing my cursor?
No.
Oh, really? Let me do this. Let me change the color. Let me look for a brighter color. Yellow is still a good color. Yellow is still good. Okay, good. So I'll use that. So can you see this area that I'm marking up now?
No way. Okay, maybe the challenge is my screen, whether it's freezing.
Yes, probably.
Let me translate it.
I'm using two laptops here. So I'm seeing the other one on the other screen. I'm seeing what I'm doing. So what you can do is you can also try to connect with your phone. And let's see.
Okay, I'm seeing your cursor now.
I see my cursor now.
Yes.
I want to make sure that you see a good trade setup here.
Okay, you're setting the alarm. You set it already.
Yes, I set it up. I'm readjusting it. So what I'm saying here is this, like the question you asked, right? Which is a very good question.
Yeah.
These areas of support, you can see the way I'm marking, right? You can see where I'm marking with the yellow with the yellow drawing through.
Yeah.
Okay, good. So the market might not come down to this zone again. It might not come down to this bottom zone again, because what I'm seeing is that it's forming another support up here. Okay, and it's
Yeah, and
forming
the
higher
Bollinger
highs.
Bank is even aligned with us with
Yes,
that
it's
level.
aligned. Yes, God bless you. So you can see now, if we look
Mm.
at, okay, so you see the currency strength meter has changed. USD has lost some points. Okay, so
I know.
yeah, so let's take it that, let's take it. Okay, so they're almost at the same. The currency strength meters are almost the same. So for good. So let's take it, for example, for for explanation purposes, that USD is still stronger than Japanese yen. Okay, and we're seeing an up arrow. That is 2 point already. Okay, the next thing that we're looking at here is price at this support area. You can see this green line, 1, 2, 3. This is support.
Sure.
Okay, so is price touching that support area? That is 3 points. Okay, now that's 3 points. The fourth point is price also touching this our lower Bollinger? You can see it's our lower Bollinger band here, right? It's also pushing up to to solidify this place as a support. So what we're going to do is we are going to put our entry now. Our new entry is going to be at anywhere from 714 and below, or 713. We'll put our horizontal rate there. Boom. And we'll just wait for markets to come to that level. Then we can take the trade for a 3 minutes buy. Okay, so if price comes down to this level here,
So
fine, you can put.
all your analysis is done. All your analysis is done on 5 minutes.
It's 5 minutes, yes. So you can do
Okay,
your analysis.
you don't consider 15. You don't
You
consider
can
15 minutes.
you can do 15 minutes as well too, for you to be able to get stronger points and kind of see where market might react off of. So you can always come here and click on 15 minutes. Boom. Okay. So if we click on 15 minutes, from what we can see here, if we look at 15 minutes candle, this area is still a support zone here that we're seeing, right? Why am I putting that area as a support zone? I'm putting that area as a support zone because, let me remove this one on the 5 minutes. So I'm putting this area as a support zone because I'm seeing a bullish engulfing here. You can see this bullish engulfing candle.
Yeah.
See this bullish engulfing candle. So using normal market structure that we know, this zone here is a strong buy zone, but this is a 15 minutes chart, right? So because this is a 15 minutes chart, each candle here is a 15 minutes candle. Now I'm seeing another support here where you have this bearish candle and this bullish candle. I can put another horizontal ray here. Boom. At 710, right? This other one here, this other area here that I'm looking at is the range of on the 15 minutes here is the range of 697 to 686. But I'm seeing an upper support here, which is 710. So what we can now do is we can mark our chart from 15 minutes all the way down. You can even mark up your chart from 1 hour all the way down. So you can have those strong areas as supports and have those strong areas as resistance as well. So if we come down to the 5 minutes, boom, you can see that on the 5 minutes, it is giving us this initial area that we marked up as a 5 minutes as a good support zone. Look at the initial place that I put, this 710 area, 108, 710. You can see that that is another support area. Why is it a better support area? I will not take the trade. I'm not going to take this USD JPY trade anywhere before this 710. I'm not going to take it within this area here. This area here, I'm not going to take it. Why? Because I see a pivot point here where market pushed up from here, pull back, more or less like retest, right? And it's going up. So if it's going to come back, I'll rather wait for it to come down to 710 area because I see another green line here, which is like a support. So between 713 to 710 is a good buy area for USD JPY. That's what you want to do. That's how you want to mark up your chart and wait for it. If it doesn't come to 710 to 714, there's no point rushing inside the trade. Wait for the market to come to you, then you can strike. So that way, when you enter the trade, you know that all things being equal, within 3 minutes, you should clear. If the trade is not going to clear within 3 minutes, you can do one rollover, maximum of 2 rollovers. because Matiteya says when he takes a trade, he does maximum of 2 rollovers. When you do maximum of 2 rollovers, if you more often than not, 70% of the time, it should go your way. You should clear that trade. If it doesn't clear, then it's one of those trades that don't just clear. Market does its thing. That's why we have over 70% win rate, which means that if you take 10 trades, you should win 7, 3 should be lessons. So if you have 3 as lessons and you win 7 trades, you will still be profitable. You should still do up to like between 2 to 5% of your account. And that's what we want to have, but that is what we want to stay with in terms of consistency. So the same thing, you mark up your chart, then you wait for market to come down to that area. If market does not come down to that area, if it forms another maybe support at the top, no wahala, we'll readjust our analysis and wait for the market to come down to the zones that we want to take it for, and we're good to go. So that's how you want to mark up your chart. So sometimes, like you rightly said, some support areas market have left there, it's not going to come back there. If it's forming another support, which I'm seeing here, market will still most likely come down to this area. So this is a very good strike zone, 710. Anything from 710, 713 and below is a good strike zone, because this market, the way I'm seeing it, is still going to come like this, touch this area and do what? Go back up more often than not. So you can see USD is still stronger than Japanese yen. It's 30. USD is 30, Japanese yen is 26. So more often than not, it will continue to go up, and that's how you take your trade. So 2 good trades.
Okay.
Yeah.
Okay.
2 good trades can give you 5% of your account. Go ahead.
I know. So you don't have how do you treat this 200 EMA? Because
So
this
how
200 EMA
good.
generally supposed to determine the trend of the market.
Good.
Like for this USD JPY, we should only be looking for a sell, for instance. But with this analysis now, if we can take both sides of the trade without
You can
buy
take
or
both
sell,
sides of the trade.
provided it's at
Yes,
provided the price is at a critical level of either
exactly.
support or resistance.
Good. And I like the question you asked. You see, for the 200 EMA,
Yeah.
Matthew Teya, the way he uses it,
He uses as just
he uses it if price is
as just a
below,
level. Yeah.
yes, if price is below the 200 EMA, he usually looks for sells.
Yeah, you for sell, yeah.
If it is below price, he looks for buys.
It's for buy.
Yes,
Yeah.
that's the way he uses it basically. But don't forget that the beauty about this market is that it is dynamic, right? You need to understand the language that the market is giving you at any point in time. So because of what we are seeing here, we see that because it is high frequency, okay, we want to go with what is happening at the lower time frame, what we can see in terms of where is the market going to, is it trending up, is it trending down, is it consolidating? If we go to the 1 hour, so if I go to the 1 hour here now, right, going to the 1 hour here, I can see clearly that you can see that USD JPY has been on a downtrend on the hourly. Okay, it has been on a downtrend, but that doesn't mean that we should only be looking for sells. If we come to the lower time frame, we come to the 15 minutes, and we kind of look at what is happening, right? This market is beginning to work its way back up with what we can see from the currency strength meter. So minutes, from what I'm seeing here on the 15 minutes, this market will most likely still do what? Pull back down and continue to push back up. Why? Why am I saying that? I'm seeing a bearish engulfing here. I'm seeing another bearish engulfing candle here. These bearish engulfing candles are strong areas, especially on the 15 minutes, where when market gets there, irrespective of what is happening, is going to react off of that zone. So USD JPY, the way USD JPY is, for me to sell USD JPY, I will wait for USD JPY to come to this level here, this area, anything from 781 to 787 is a good area to sell USD JPY if we're looking at regular structure, market structure.
You are picking your point from that engulfing, bearish engulfing.
Yes, bearish engulfing here, right? Bearish engulfing. So I'm speaking in advanced terms with you now. based on what I'm seeing. But if we come down to our 5 minutes, okay, there is still room for this market to move up to get to this level here. You can see, look at what the market did. This is beautiful.
Yeah.
You see what the market did? It came here. It came all the way down to why did the market react off of this zone? Look at the wick. It wicked it and did what? It dropped. And it hasn't come back to that place. Why did it wick it? If we look left, it's because of this bearish engulfing on the 15 minutes. Right? So this market would still tend to push up because right now, as we speak on the lower time frame, USD is stronger. So I'm going to wait, like I said, for the market to give me a pullback into this zone here, and I'll take it for a buy. So now I know what USD/JPY is telling me. I see what the market is saying. Oh, this market is still going to go up. Okay, no wahala. We'll wait for it to come down, and we'll come and take our entry. Don't be surprised. Don't be surprised, sir, that this market might come down to this area, react off of it a little bit, still come down to this area here and react off of this area because of what has happened here in the past. It will now make its way back up here to this zone that I marked here. You can mark up this chart and look at it. And I'm like over 70% confident that that's what this trade is going to do, except if there's news otherwise. You can see what USD/JPY is doing now. You can see this bearish candle coming down.
Yeah.
That is why what you want to do is you want to wait for the market to come to you. So this is the first entry point zone here because we are now approaching the London session. Boom. This is where I'm going to wait for the trade. Why am I going to wait for the trade here? Because this market react off of here, went up, came back, wicked it a little bit, went back up. Now it's going to find a way to come back here at some point in time. I'll wait for it here and take my trade. Worst case scenario, if it goes down and pulls me in a drawdown, I will take a second entry here. This zone here. So these are my buy zones. These are my buy zones. That's how you want to look at it. That's how you want to take your trade. Very easy, very simple. And you'll see by the time the market comes back to this zone here, you'll see what will happen to RSI and stochastic. They will come down here, cross down, cross up. This one too will do the same thing. Mark its way down, cross up. And that's where this is going to give you an amazing trade setup, according to how Matiteya uses it. So it's just that simple process that you want to look at. Is the currency strength meter, is it aligning with the up arrow or the down arrow? If it is, go to the third point. The third point is, it's priced at a support or at a resistance. If price is at a support and at a resistance, it's giving you either a strong resistance or it's giving you a strong support, then what you want to do is wait for price to come to that entry zone. Go to your broker, set your timing, put your 3 minutes, don't risk more than 3% on your account and take the trade. The reason why you don't risk more on your account is because in case the market needs rollover, you can roll over conveniently without having to worry about you over leveraging on your account. So it's as simple as that. There's no any big deal about it. The same thing is what we do for a sell. Currency 1 will need to be weaker than currency 2. Then we look at price. Is price at a resistance? Is it touching the upper Bollinger Band? Is it touching the 200 EMA? If it is, then you take your trade for yourself.
Okay.
Yes, it is just as there's nothing complicated on it. Hello, you're breaking up.
With your analysis now, it means you're more rating to currency strength meter than the 200 EMA.
Yes, so you see,
you give more recognition to the currency strength meter.
But
the currency strength meter is, the currency strength meter, repents. For instance, if it is, it moves to the direction of the market. It's not static.
Yeah. So
it's not static. It moves in the direction of the market. For instance, if this particular market keeps moving down now for the next 2-3 minutes, you see it will change, telling us that JPY is stronger than USD.
Yes, absolutely. So you see, the reason why we stick on the currency strength meter at some point in time is because you see those currency strength meter, sometimes with the currency strength meter, it might not be applicable. It might not be applicable on the higher time frames, because with the higher time frames, you're looking at it depending on the kind of trader you are. Are you, an intraday trader? Are you a long-term trader? So you might not necessarily need to use the currency strength meter. You're going to be trading way off of market structure, right? So if I'm doing my normal trading, this is like normal forex here that I'm trading. I'm not waiting for currency strength meter here. I've already marked up my chart normally. What I'm seeing here now is Euro USD now. Euro USD is at an area for me to sell now. You can see I have this arrow here.
What time frame is it? Daily?
This is daily, yes.
Okay, that's daily.
This is daily, yes.
Okay.
So I've marked up
Have
this
you
chart.
checked the weekly? Okay.
Yeah, I've marked up the chart with Stevenson Lindo earlier today. So this is the weekly here. So this is the weekly here, right? So with the weekly, based on what we use, right? This is a break test on the weekly. Euro USD, which we are expecting it to go down. So even if Euro USD only comes down to this level here, it comes down to this level here that you can see that I'm putting my stuff here. That is a lot of pips. If I do this, this is over 400 pips, right? So I know that on the weekly, Euro USD is at an area where we should begin to look for sell.
To change his mindset.
Yeah, sorry, I'm joining Dr. Onodikwe's trading the skill 7 p.m.
Okay.
Yeah, so we'll just wrap up.
Is it on WhatsApp or it's on WhatsApp?
It's on.
Okay, look at what you do, please. You just send me this video. Yeah.
I'll send you the link. Yeah. So so normal. So this is normal forex trading, right? This is normal regular forex trading. So I don't use. I don't use. I know. You understand? So we are using the currency strength meter because we are trading at a lower time frame, at a lower time. Thank God, sir, that we have this meeting here, because I'll be looking to take Euro USD. If this thing pushes to 1.22344.
It still has some room. It still has some room to go up.
Yeah, it still has some room to go up. So
you're using the weekly stuff. Yeah.
I've come down to 1 hour now. This is 1 hour. So this is 1 hour already, and you can see here on the 1 hour, this is a beautiful setup for me. So here, break, retest, drop, is retesting again here. So what I'm going to,
it's still going up a little.
Yeah. So I will wait for it. Anyway, if it comes up to 1.22446, I'll take it for itself. I'll do like 30 pips. I'll do 30 pips for like 60 pips. So that's 1:3 risk to reward, which is good for me. So coming down to high frequency, we are trading lower time frame, right? That's why it's called high frequency. The movement is high. The frequency of the movement is high. So we are looking at the currency strength meter in conjunction with what price is telling you. Now, the 200 EMA, so sometimes this thing lags, right? That's why what the currency strength meter is telling you, plus what the 200 EMA is telling you, plus what the Bollinger Band or whatever is telling you, those ones are additional confirmations for you in proportion to what the market structure is actually saying. So you see all these up arrows that Cash Trap is calling and all this Bollinger Band, it has been built into support and resistance. It's built, the foundation it is built into support and resistance. But a new trader would not be able to identify these things like you and I that have been trading for some time. So that's why those 4 confirmations are there. The rules are there. Wait for currency strength meter 1, wait for support or resistance 2, and wait for the arrow 3. Your support or resistance, is it touching the middle Bollinger Band? Is it touching the lower Bollinger Band? Then you take a look at your stochastic and RSI. If they're giving you the direction, fine. If they're not giving you the direction with 4 points minimum, take the trade and you're good to go. So with this little explanation that I did, right? If you join Taylor Max's session, you join Matthew Taylor's session, their live trading or their recorded training sessions, or even their recorded live trading, these things will be way more clearer for you. It is the same thing that Dr. Onodikwe is teaching now. Yes, right? Yesterday, when these guys did their training, they called out trades. This guy called out 3 trades yesterday, 3 of them cleared. Matiteya called out 2 on a Sunday on a training session and declared. So you can imagine making money on a Sunday when market is just opening. So it's really funny and hilarious. You can see what USD-JPY is doing. USD-JPY is coming down to that hour zone. See what is coming down. So if I'm going to take this trade, I'm going to wait. I'll take my first entry somewhere around 719 or thereabout, and I'll take my second entry at anything from 698 and below. That's what you want to do here. So you can see what I'm saying, that the market is coming back to our zone. Look at what I marked. So look at what Cash App is doing. Cash App is giving you an up arrow. And USD,
giving a call.
Yeah, it's giving an up arrow. USD JPY. What's the currency strength meter saying? Because it does change. So you see, USD has even has weakened a little bit. But because we understand what market structure, so you can see this is a support zone. This is another support zone. I can confidently take my first entry here. I'll split my percentage. I carry my 3% on my account. I split it into 3. I put one here. I put another entry here. I'm telling you, Mr. Gordy, that this trade is going to clear. Worst case scenario, you roll it over twice, it's going to clear. It's as simple as that. So with that being said, let's hop on Dr. Onodipe's session and
okay.
Just kind of
I want to do school runs now.
Okay, so no
just
problem.
Send me the link. If I'm back on time, I want to do
no
school
problem.
runs.
No problem.
For school.
All right. Have a
put the link on my WhatsApp. Please send me this recorded video.
I'll send it to you. Don't worry. Yeah.
Thank you.
Bye for now.
I appreciate it.
You're welcome.
All right, bye, sir.
Okay.
All right, bye.